What's up, everybody? This is Jimmy with Trading Decoded. It is January 24th, 2024. It's 4 o'clock in the afternoon. The market just closed. I had to step away from the computer at 2:30 this afternoon, so there's not much I could talk about after 2:30 on the chart, other than the fact that we opened with quite the gap above us, and by the end of the day, we closed that gap. With that said, let's go ahead and talk about what SPY provided us today, because if you were patient, you got to get, along with a little bit of aggressiveness, you got to make some good money today. Let's go ahead and talk about what we were looking for and what we got. So our pre-market levels, to the upside, I was able to find 3 targets, 2 of which got hit. The third one almost got hit. To the downside, we had 3 targets low. And then, of course, yesterday's high of day and futures lines and all kinds of things. At open, I wasn't really excited about the prospect of playing puts, so the chart was going to have to prove to me that it was worth the risk to do so. I don't know if you guys noticed, but the market's really happy right now. We keep putting in new all-time highs. Qs are flying to the upside like it's nobody's business. It's tough to be on the put train, okay? Which is a good thing, because if you don't have a bias, meaning if you're the guy who thinks that it can't go higher, or you're trying to justify the fact that the market has no business being up here, I reminded everybody today, well before open, guys, if you have that bias, if you have a problem differentiating the differences between Wall Street and Main Street, trading in these levels becomes very much difficult for you. Okay, I was that guy for most of 2022, and it severely gimped me in my ability to successfully trade. If you feel that it can't go higher at any point in the day, or it can't go lower at any point in the day, inherently you're going to play the opposite position of the trend every time we put in a new high or a new low. It's a very expensive bias to have, and it usually doesn't work out. Take it from somebody who lived it for a good year, until I had to accept that the market's just going to do what the market's going to do. It's going to seem irrational to you, which is why you feel the way you do. But trust me when I tell you, it will continue to do and defy everything you think it should be doing on a regular basis. So learn to live with it, or learn to walk away when you feel that way. With that said, our call line was a breach of 488.05. Our put line was, well, a breach or a close below 487.25. Before we got there, though, we were talking about what flags are and how to play them, and how I only play flags that are pulling back to a level of resistance. Well, we drew the flag line, which originally was this green line. We had started a downtrend. We hadn't put in, we were wedging down, right? So we have our high of day, lower high. We're holding resistance here. ADD was selling off, but Qs weren't. So this was an uneasy trade to take for some folks. I didn't take this, but we called out or suggested that this is a flag play at a proven level of resistance that seems to be holding. What you're hoping for in this move is that we breach this green line and head down to the next support. Well, that happened. So that ended up being a decent trade for some of the flag players we have in the group. However, we got to our put line. Now, since we have price action to the left, a breach is justifiable. Now, where's our stop in this? Well, it's at this resistance up here, guys. If we close above that line prior to make it here, you want to stop yourself out of the trade. We entered this put. Some people got in a little earlier. Some people waited for the breach. Some people waited for the close. Either way, we were expecting to move down to the next line. It's the first spot we were going to get roughly a 20-cent move. And that's what we waited for. Several people took this trade. Several people made money on this. You got about 18 to 20% on that move, believe it or not. Some people even waited for a pullback for the test of this trend line, in which case you actually got a better entry and probably made more money when we made it down to that support. What we were really hoping for was some kind of a trend to continue. We pulled back to resistance. This is another potential entry point, so long as we hold resistance, what was support, and we continue to put in lower highs. The next step in a downtrend, you got lower highs, lower lows, lower highs, lower lows, lower highs. I'm sure you can figure out what comes next. Well, in order to put lower lows in, we'd have to get below here, which breaks that level of support, which should take us down to the next one. And it was at this point that we said what we really want to be better and feel better about puts, because the Qs were trending up for a good portion of the morning. And we're going to look at the Qs. And I want to show you what our entry was for that last set of puts. Look at 10 o'clock right here. What is the first thing you notice about that candle? Yeah, so we were moving down on Qs. We found support, started moving our way up. I was telling people, you don't really want to play puts on SPY unless Qs can break this trend. Okay, so a lot of us jumped into puts on SPY because the Qs finally broke that uptrend. That's this candle right here. We also closed below a support line here on SPY. We were looking for a move down. Now, why, Jimmy, did you decide to get out here? I'm going to show you why. You see this line right here? You see how it stopped the move down at the open here? Trust that that support's still going to be there, guys. Don't hope that it's going to break through it and continue down. If we would have moved down through that and gotten through this line, maybe we can sell off a little bit more, and you see that happen later in the day. But until then, accept the fact that that's a pretty good support. We got in because the Qs broke that uptrend. We got out because that Qs hit that support. Very simple. We got in when it broke the uptrend. We got out when it hit support. And wouldn't you know it, it was the low of day for SPY at that moment as well. Well, does that mean I'd buy calls? Absolutely not. There's several things that need to take place before we consider buying calls. For me, was going to be a breach of 488.05, which is way up here. A lot of things have to take place in order for us to get that breach. First and foremost, we've got to get out all the sellers that managed to push us down here in the first place. But even before that, we've got to break the downtrend. So we had some people that were still holding onto their puts, hoping for this to continue down. We put in a higher low. At this point, I said, right after this candle closed, I said, if whoever's in puts, be aware, we just put in a higher low. That's usually not good for puts. And it wasn't. That was the exact moment. That was the last chance for you to get out of those puts with small loss, possible small gain, but definitely before it got painful. We closed above the downtrend line, okay, which killed the downtrend. We put in higher lows, higher highs, and at this point, we were creating a bear flag. Okay, I'm sorry, a bull flag. As defined by, we are trending in one direction, we get a pullback, we're looking for a pullback. Same thing. This was a bull flag too, but the problem was we were still under the downtrend line. We hadn't proven a uptrend yet, right? An uptrend is a higher high, higher low, higher high, higher low. This is the confirmation of an uptrend. Now we need to break that pullback while in an uptrend. You enter the position, you get out at the next resistance. Okay? We get to and through that next resistance to make it right up, to and through, and continued up. Now at this point, Qs started up their journey again, right? They started up their journey again. And we got to our call line. Now at 10:42, what are the Qs doing? They're pushing hard to the upside. My only criteria here, guys, was don't consider puts at the very least unless the Qs break this uptrend, just like over here. But even then, it's a very strong market. Don't make that the only reason at this point. There's a big difference from blindly buying in because we have broken an uptrend when you're all the way up here at new all-time highs. Down here, we hadn't even taken out the opening high yet. Okay, so that's different. But nonetheless, Qs did break through that uptrend and continued right back down to support. Held that support and continued to move up and up and up and down until it wasn't anymore. Okay, this was most of our last trade of the day happened by this time. Okay, I don't know about you guys, but being done with work by 10:30, 10:45, 11 o'clock in the morning, It's a beautiful thing. It's a beautiful thing. Qs ended up breaking that upward trend at 1047, which is right here. I'm sorry, 1050. By then, SPY had already broken down, but this was your 1050 drop. We find support, lower high, lower low, and then we break the downtrend again. Okay, and then we put in a higher low. So this is kind of a no trade zone going on in here. As you can see, we were stopping at these levels. Once we got above it, we almost made it to our third and final target high. Didn't quite get there. And then we started to sell off. And we started to sell off good. And while we were up here, people were saying, Jimmy, where would you buy puts? And I said, guys, I'm not touching puts in a market like this unless we can get below 486.86. If we can get below 486.86, I'd be looking for a minimum of 486.50, but I'd love to see 486 even money, were my exact words. And I said this way over here. So all you had to do was wait. But yeah, you could have played puts earlier and made more money. However, why did I like this line? Well, a lot of buyers would have had to gotten squeezed out of the market to even make it down there in the first place. Okay? A lot of sellers would have had to do a hard work to make this move continue to the downside. All right? Plus, once we started to look at that, we had just broken, if I'm not mistaken, right around here, 214. Yes. On the candle that got us below 486.86, Qs had just broken a support level, and I said to everybody, guys, Qs have a fair amount of room to go before they get down to that crazy support level that was screwing us from going lower earlier in the day. I would take this ride down until the Qs hit that spot. Okay? So that got hit at 221. 221 takes us out right to our futures line, right here. It's also where the 486 number came into play because we had enough room. We were close enough on SPY to make it to 486.50, which was at the time our last support of the day, right there. But Qs had a lot more room to go, and Qs have been driving the market all day. So all we had to do was wait for the Qs to get to a known solid support for them, and then we would expect that SPY would continue to fall until the Qs hit that spot. I guesstimated where that spot was going to be in relation to where SPY was, where Qs were, and how much distance they had between its support level. 486 was my guess. Well, we hit 486.97 on that move down. I'm sorry, 485.97. That was 3 cents off of calling the bottom of that particular drop. That was a massive move, a nice clean move. All you had to do was wait. We were squeezing buyers out, forcing selling to take place. We made it in and out at 2 different levels, safe, aggressive, banger of a trade. I didn't take that one either. I was done for the day. I'd already taken my second trade of the day. This was my second trade. I bought puts here and I bought puts here. Okay, it was like an 18% here and almost 40% on this drop. Okay, good day. It was a good day for me and for many others. And then I wasn't here for the rest of the day, but we had determined long ago, much before this part of the day, that our midline between buyers and sellers where the market was split was 487.59. Okay. That line held the support and resistance quite well until it didn't. Once we got below that, we considered it to be a seller's market. So we were only looking for puts below 487.59. And if you heeded that warning, well, it paid you. Okay. It paid you. Now, we end up pulling back, hitting levels of resistance, moving down, lower highs, lower lows, ultimately closing the gap of the day, albeit late in the day, but at 3:53 this afternoon, 7 minutes before market close. It was a pretty wild day. I hope you all made some money today, and I hope you found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, there's a link down below. This is what we do all day long, every day. Okay, we have 2 different trading rooms. One is my style that I teach here and show you guys in these videos every day. The other one is a 920 crossover trading room put on by P Daddy, one of our other moderators. Very good guy, completely different style of trading. Okay, we have a group of people that enjoy that better than my style of trading. And then we have a group of people that enjoy being in and out of the market quickly so they can go about their business and go about the rest of their day, having made the money they want and need to make in short order. Okay, I'm not a fan of trading all day long. It's just not my cup of tea. And, that's because I didn't leave my day job of an 8-hour day to go to another 8-hour day job, especially when I can make more money in one day than I used to make in a week at my old job. Just being patient and taking good trades. Also, check out our website, www.trading-decoded.com. And that's pretty much it. Hope you all had a fantastic day. Till tomorrow. I love you guys. See you.